Hi, and welcome to another video from Altcoin Buzz. I'm Frank, and today I'm going to walk you through a detailed technical analysis explaining how and why Ethereum broke out, as well as 5 ways that we can use to determine how high the Ethereum price can go. So before I get into the technical analysis of this ascending triangle, it's worthy to note that on May 26th, I recorded this video talking about the important double top at $217, saying that if we broke it with a close above it, that we could have potentially a very big move up. And it certainly looks as though that move has begun. Well, it has already begun. And the question now is, how much higher could it go? So the first thing to note is that we have this ascending triangle. Now in the video I mentioned a double top. Strictly speaking, that is what it was. However, you can see that the price resisted at this level. So we went up to 219.25 and then came down. Here we came to 216.7 and came down, and then again 216.7. So although this is technically a double top, we can see that this price zone in general has provided resistance, and that's the important thing to note. Okay, another thing to point out for this ascending triangle is the imbalance of buying and selling pressure, right? What do I mean by that? I mean that when we get to these points at the bottom of the triangle, there's more buying pressure than there is selling pressure. And also this imbalance of pressure is occurring at higher and higher levels, which is showing the strength of the bulls, as you can see by these arrows. Furthermore, we have an imbalance of buying and selling pressure at this level, okay? So when we get to this point, there's more sellers than buyers. But the difference between this line and the diagonal line down here is that this is all at the same price level. So that means that here the sellers are getting tired, here they're getting worn out, and here they're getting really exhausted. So that means that the more times that we hit them, the more times that we're likely to break out, and that's exactly what happens. So I had a tweet in which I mentioned that I'm waiting for an entry if it comes back to support. Now I didn't get all my orders filled. I had orders between 218 and 217. So I didn't get all of them filled because we came down only to 217.57. And then, of course, we had a nice big move up, and I'm going to walk you through why I already took profit on the position. So one of the things that I do when I enter a position is that I look, first of all, at my stop loss. You know, I like that there is a high liquidity over here, and that, you know, a break below this might signal you know, a loss in bullish momentum. So my stop loss was going to be between 202 and 197, which is the previous low of this pattern. So it was going to average out about here. Now this equates to an 8% potential loss. So what does that mean? That means that if I make already an 8% profit, then I'm going to take a certain percentage of that trade out. As it so happens, I took 50% profit from this trade already. So that means that if the price now comes down and we come down to this level, I will still be at more or less break even. Whereas if we go up again, I will still be able to take advantage of that. Okay, so now let's walk through 5 ways in which we can determine how high the price will go. The reason why I want to take 5 reasons is that it's very easy to think of one reason for which the price can get to a certain level and then just accept that. But in reality, technical analysis involves many different theories and strategies and opinions even. So it's good to do an analysis of all of them and see if you can find any confluence. Okay, so first of all, for this ascending triangle, we technically would take a 1-to-1 extension of the thickest part of the triangle, which is from this point, as you can see down here, where this first arrow is, to this highest point over there, and then we would do a 1-to-1 extension, okay? So we're going to draw a red line over there for that 1-to-1 extension. That's the first thing. Second way of looking at this is doing a measured move of the trend which preceded the triangle, okay? So this triangle is a continuation pattern of a previous trend. So how do we find out where this previous trend started? You could, for example, say that this is the leg up that we're trying to imitate, in which case, if we really take the bottom of this leg and we go to the top of this trend and we do a measured move of this whole trend, assuming that this is the correction of this first leg, then we would get a price pretty high up there, okay? Now, while it's entirely possible that we do reach this higher level, based on the previous price action, I think it's more realistic to take profit at a lower level. I would rather take a leg which is a little bit shorter and which will still lead to a significant profit, which would be at this point over here. Note how this is also very close to the measured move of the triangle, okay? So again, the reason I'm taking this price point over here is that, first of all, it's a notable pivot point. We have previous highs over here, which led to this low over here. And the second reason why I'm choosing this as a pivot point is because the retracement came down to the 618. So this is a typical retracement for one leg, and then we can measure the move going from that next leg up. The third way that we can use to determine potential resistance is to very simply look at the previous high, which is marked by 250.2. Of course, there is a high up here as well at 289, but for now, this is a notable pivot point and there is potential resistance over here. Then the fourth way that we can look for potential resistance is to look at diagonal trend lines. Now, the diagonal trend line I have drawn over here takes the closes of the candles, because if you take the extremes, then you have to use this point, which has a lot of abnormal sort of price activity going up there, and I would rather use the closes since it's more sort of normalized price. Finally, the fifth way that we can use to see potential resistance is the liquidity. So as you can see here, we are generally in a zone of low liquidity. There's not a lot of clear, back and forth between 220 and 255. However, after we reach this 255, we see a bump in the level of potential price liquidity. So for that reason, we would have a box, for example, which we could place over here. As it so happens, it's at the previous resistances. So in conclusion, we have potential resistance from the one-to-one measured move of the triangle, the one-to-one measured move of the previous trend leg, the previous daily high, the diagonal resistance, and the liquidity up here. And if we draw a box, we could assume that there might be some potential resistance over here moving forward. Now, that's not to say that we're going to resist from there and then come all the way back down. All that means is that it's more likely than not that we will see some sort of price action once we get to this point, and we may see a retracement, or it may stay within this zone for a while and then move up. But the point is that it's unlikely that we cross this sort of $250 to $260 zone in one foul swoop. If you're trading this on the lower time frames and you're interested in entering a new trade, well, one possible thing you could do would be to make a measured move of this, which, as it so happens, also comes to one of our previous price points, and say, okay, well, I'm targeting this level and I want to enter a long position over here. And in this case, you would want to stop out over here and target that, which is already at 2.2 to 1, which is not a bad entry. You could further rationalize this by saying that we have a pullback over here and that now we have broken out of this pullback. In any case, these are the 5 reasons for why Ethereum price might find resistance once we get to this price point. And let me know what your thoughts are. Are you trading Ethereum? Are you hodling Ethereum? Have you benefited from this move? Did you buy the breakout? Curious to hear your thoughts. Okay, see you in the next one. And don't forget to hit that subscribe and that like button if you haven't already.